I think we'll get underway. Welcome everyone to, I think it's our fourth Ask Me Anything webinar now. They always have been quite popular. We get some great questions coming through, and probably this time we've had more questions than we've ever had. There's no fake questions, there's no fake news in these webinars. So everything's raw, we just catch and pass it on through. So what we're going to do today is, the team here, we're going to go through the questions that you've got. I'll introduce the team first because they're probably the most important people, and we're very lucky here at LOIS Leasing to have a crew that is not only technically very, very sound, but also have a lot of experience in the practical side of things, given obviously we have the solution. So first, my far right, Stefan Ego, he's a CEO and founder of LOIS Leasing. Again, chartered accountant, as all of the team are here, and has a very, very broad and deep understanding of IFRS 16, as well as sort of the greater accounting and financial environment. Beside him, beside me here, rose between two thorns, Hayley Williams. She is the head of customer success here at LOIS. She runs a technical team. Part of that team is Edward Brower. Ed here is, again, another chartered accountant. He's been really involved in a lot of the new functionality that we've been pulling together. So now we have our own dev team. We've heard what our clients have said. We've seen and heard what the market is feedback around, what is really needed and what's missing out there. And Ed's really at the tip of the spear with regards to that. And then finally, myself, I'm head of sales. So I'm not going to answer any technical questions because they don't allow me to, for very good reason. Okay, process for today. Pretty simple. If you've got any questions, go into the Q&A within the Zoom meet that you would have. We'll try and get through them. We've already got 14 questions that have come through. Please don't use the chat functionality for these questions. Put them in the Q&A. If it doesn't get answered, we will come back to it afterwards as well. Our wonderful marketing team will send you a copy of the webinar. We'll also follow up any questions and actually formalise some of those as well, because what we normally find is that people ask these questions and the majority of people go, actually, I wanted to know that as well. So it's really good. Okay, team, should we get stuck into it?
Yeah.
Okay. I have anonymised all the people's questions. So if you have asked the question, don't worry, it's not going to come from it. But Barry from Parramatta, first up, we're facing an issue we're facing at the moment that is around sale and leaseback, rent-back transactions. Under AASB 16, we need to reduce the value of the ROU asset by the gain on sale of the asset to reflect the portion of the right transferred. The issue we have is how to best reduce the value of the ROU asset for this adjustment, which will then result in a reduced depreciation over the life of the asset. At the moment, we've parked this gain against the GL account, resulting in a difference that we need to reconcile to LOIS. LOIS is obviously our lease accounting system, but hoping to retrospectively fix this. Okay, first up.
Okay, so pretty easy one. We record this adjustment as an impairment. So within lease accounting, there is an in-life change called impairment. You would record it as an impairment, so that gain amount you would put through as an impairment for that amount. It would mean that your right of use asset is then reduced by that amount, and then your depreciation would then adjust for all future periods going forward, resulting in the reduced depreciation over that period and the right of use asset at the point in time of the sale and lease transaction.
Okay.
Yep.
Obviously a technical one. Again, Hayley and the team are here to help you around that. For actually the specifics around how to do it within LOIS. Stefan, just as an extension of that, we're seeing quite a few of these at the moment where there are sale and leaseback transactions, also probably moving into acquisition accounting. What's the sort of go around that? What's sort of some advice you could give around that?
I think one of the strengths of the system is that it's got a lot of flexibility to be able to enable transactions to be done within the system. And in the past, what has happened is people will do transactions in Excel and then they lose that system of record. LOIS can pretty much do everything that comes up. So we've had a lot of acquisition accounting where we will actually create a new environment and do the acquisition accounting with the client within those. So that's an option if you've got quite complex stuff. For sale and leasebacks and the like, it's really about, sometimes it can be a bit tricky because it doesn't sound sensible to use what Hayley said, but that's just the tools that we do have flexibility to be able to do it. But main thing is you pay for support, reach out to the team and get the answers.
And the other thing is the actual person, not Barry, we will send through some detailed notes about what exactly you need to do. So following this session, over the next week or so, we'll come back to each of the individuals on this that have asked these questions, just with a little bit more detail on each of the questions, so that you've got something to refer back to and ask any additional questions you may have on those points.
And I think what this also points out is just it goes back to the age-old issue with IFRS 16 is the complexity of the standard, like acquisition accounting, sale and readbacks, stuff that was unclassified easy previously is obviously in next level when it comes to complexity these days. So spreadsheets probably aren't going to cut it around that. There needs to be some sort of expert help. Okay, thanks for that. Okay, next, what do we got? Okay, one more from Bedrock. How do you run the LOIS report for full year 27 forecasts? Some vehicles due to expire. As we normally replace them, is there a way to capture these under full terms for FY27 in the report? Probably, Ed, before I hand this to you, in an expansion of this is a common occurrence when you obviously have leases expiring, etc. So,
yeah.
First the question, and how do you sort of deal with that?
Yeah, firstly, just on the question, it seems it's more based in around the forecast and how to account for these leases that may expire, but you know that you're going to be tacking on additional term that will go through the full year 27. Effectively, the way we do forecasts here with LOIS is you've got a couple options. You can use the sandpit. That's where we order a replica environment and then load up your forecast leases into there. The other option is you can load up a separate lessee and sort of name it forecast in some way, shape or form within that lessee, and then load up your forecast versions of those leases against these lessees. But back to what you were bringing up, DK, is it's very common from what we're seeing. There are a lot of fleet vehicles, and I guess the whole fleet process is quite clunky and quite kind of delayed in terms of when you get the accurate information. So a lot of clients are having to work with month ends of having expired vehicles that they're still paying for. It's very common from what we've seen across a lot of the fleet clients we work with. So what happens in that situation is we try to revert back to bring the control back into the accounting and finance team by putting up or going back to your accounting policy and seeing what would make practical sense to get through your month ends. Would it be tack on an extra month every month end? Maybe increase that to 3 months to reduce the administration, maybe 6 months or 12 months. That's the first point of attack we try to go with. And then what we also have that we've been working on for a while, and myself have been working on for a while, is our fleet product. And we design a process that's tailored to your month-end process to ensure that you're capturing these leases in the most accurate way possible for IFRS 16.
Is it fair to say that what we're seeing, the data transfer between fleet and finance, and probably similar between property and finance as well, there's either a lag or there's inconsistencies that cause the issue? Like, what sort of controls in that should organisations have in place to ensure that, fleet are saying, here we go, we're paying for 100 cars, but the finance going, well, do you have 100 cars or do you have 96? Because this has been handed back, etc. What should companies be looking at with regards to tighten this process up?
Yeah, the feedback we've received from clients is that a lot of that process is outside of their team. So there's a lot of frustration with not having that control factor there, which is why we try to tie it back down to the policy and give them some control in that aspect. But often, at least the recent feedback I've heard is that it's usually a timing thing. The correct details will come through in the next 3, 4, 6 months or something like that. At which point the numbers will be updated. So then, if you're having to kind of bridge that gap in between when you get those accurate numbers, that's when we revert back to the accounting.
Yes, policy is key, but that's always been the way, hasn't it? But
Yeah.
IFRS 16 since the start.
Yeah.
Normally we find the people who didn't have a really sort of robust policy, that's where, as time's gone on, that's where the mistakes sort of have come in.
Yeah.
Okay, thanks for that. Mary from Tie Happy asks, we have a 445 calendar. We set up when we first implemented in 2019. It's changing in 27. When will we be able to do that? Stefan, you're the chief. We can tell people to do it.
The retail calendar, when it was designed to be a one and only, unfortunately. And so as time's gone on, people do change their retail calendars. So at the moment, the devs in the UK are working on the upgrade to this to be able to change the retail calendar. So it's in the roadmap for this year in the latter quarters. So it shouldn't be too far away. And then basically what that will involve is a little bit of migration and then a change to update that. And so it will probably mean for clients, once the functionality is there, there's not much to do. It will be mainly with ourselves.
Cool. You've got a big stick, mate. Come June. Seen it. Slide from Hogwarts. Haley, this is one for you. We've got a lease and LOIS has a 2035 expiry. We've revised it to 2030 termination date. Is there a way to bring it forward, the profit adjustments for the current period, as opposed to seeing these adjustments at the end of the lease? We've had early terminations before, but any profit adjustments usually appear at the end. Management, that big all-seen overbearing beast, would like to see what the profit adjustments are in the current period and putting this through our books, which we do.
Yep. So two parts to this. So the first is just understanding what should be happening in this situation. From the looks of this, and we may have misinterpreted, it looks like this person has decided not to take one of their rights of renewal. So it's more so a reassessment of lease term than an early termination. And in a reassessment of lease term, there should be no P&L impact. So there should only be a change to your right of use asset and your liability. So because you're not at that point contracted for those additional periods, so it's only once you contracted and then you terminate a lease during a already in contract period that there should be a P&L impact. So I'm sure you'll be happy to know that. And then on top of that is we can use LOIS to account for that change. And just to change it up a bit, I thought I will share my screen on this one and we can have a little look. Yes.
Got all your personal stuff closed?
Hope so.
Oh, we can see ourselves.
There we go.
That job application.
Sorry, guys. Okay, so if we just look at this lease, for example, good example, because this one ends in 2035, and those are the examples we use. So if we wanted to reassess this down to we included a 5-year right of renewal from 2030 to 2035. What we would do is we would come in here, go in life changes. I'm going to do this really quickly. Consideration price change, rental date. We'll put in our modification date, which will be a date now, wherever we are. And then we use the option to change rental cash flow. We go reassessment of lease term. And then we'll go next. And then what you need to do is you then basically reconstruct the lease from that modification date to the end. And just for simplicity's sake, today we'll say, okay, well, we want to put it in for another 5 years. Well, that's actually 61 months, and whatever our rental is, that's 130,000, and it goes 0, go next, and then you just go through, and it then brings that down. What you will then see is the adjustment will only adjust your right of use asset and your lease liability by the same amount with no P&L impact for reassessment of lease term. So again, we'll send through notes for that to the person that asked the question. But if anyone else needs some guidance on that, happy to talk through it separately. Just raise a support ticket for that.
Question for you.
Sure.
Are you seeing a lot of reassessments like this? Like when obviously everything first started, you could go, if you had a 5 + 5 + 5, you could take all of those, or you could just do 5. I mean,
yep.
Economic changes, etc., etc. Why would you need to do a reassessment, and what should people actually do? Should they go back to what they originally looked at? Is there a school of thought on that?
So we should always be assessing our virtually certain periods, because in particular, when you've got changes and modifications, it's always a good point to look at those. But your virtually certain period is an assessment done at any point in time. And as soon as you know that at least, or there are indications that you won't take up a right of renewal, and you previously had said you were going to, you should be reassessing those leases down. We are seeing some of those changes for various reasons. So clients that were expecting, especially with downturn in markets, were expecting to be there in properties indefinitely, and now not. And also the reverse, where they weren't expecting to be in properties because they were going to upscale or whatever, but now they are expecting. So good. The reassessment of lease term goes both ways, putting up the term and decreasing the term. So you can do that assessment either to increase or decrease the lease term.
Cool. Okay. Good advice. Thanks. Okay. Now, for anyone who looks at this question and says, my God, this is a plant, it's hand on heart, is not. But it's my favourite question of all. What tools or systems would you recommend to automate IFRS 16 lease calculations instead of using Excel? Okay, I'm going to give a nice short pass to Stefan to go. He's been frothing at this question.
I find it hard to believe it's not a plant, but that's good. I mean, I think obviously being from LOIS Leasing, wearing the merch and with the expert team, it would be hard to go past our system.
I should have had that it's like from Cousin Mary.
But I think you've got to have a system that's fit for purpose for what you need as a business. So we give Excel big downs because it's not very good at maintaining calculations and keeping control. But if you have one lease, you'd be hard pressed to put a system in. We originally targeted clients that were only really big. So really you had to have 100 leases to use LOIS. But what we've found over time is that as we've added more functionality, both to help the accountants, but to help property people, to help fleet people, you get a lot more value from any form of system, right? And so if you can have a system that is one system of record, can do everything for you that you need for different parts of the business, the value add that you get is really high. Also, I think in Aussie and New Zealand in particular, we're really bad at costing internal resources time. So it's kind of like, oh, well, Mary Lou does it, and it's not that many hours. Obviously, if Mary Lou has a system that's efficient, you get Mary Lou's time back to do something useful. So I think I'd recommend LOIS, but you can look at any tool. The second one, how should we account for lease terms, rent adjustments, lease renewals? Again, this stuff can get quite tricky, as Hayley just outlined. The good thing about any form of system, it should be pretty simple to use. And I think the feedback on LOIS is it's simple, and you don't need to be a technical guru. You saw how easy it was to do something quite complex just now. And we can change rent terms, we can do payment profiles, we can do sale and leasebacks, you name it, we can do it. And then I guess by having experts behind the system, You don't have to be the expert. You can use the system. And then the final one, discount factor, right? So that's a really good one. And in fact, we've done whole webinars on IBR rates and the like. We won't go into that. Suffice to say, the discount factor should be applicable for the term of the lease, the entity leasing the item, and the underlying asset, which is kind of a fancy way of saying it's kind of similar to what you'd borrow debt for that asset for. So obviously a lot more complex than that, and depending on which auditor you have, can be a lot more. So there's no silver bullet for it, but it's something to do with your debt profile, asset risk, and lease term generally. And again, I'd be remiss not to give it a plug, but we also work with Deloitte, who have a tool on IBR rates where they will take your data and give you an output. But again, there's lots of ways of determining it, but basically lease term, underlying asset, and the entity that would be borrowing is kind of the factor.
Cool. Going back to number one, because it's the favourite part of my favourite question. How many leases do you think if you had, that you should have a system? Minimum.
Well, it's not actually about the number of leases. So we have a client that is in an industry that extracts products from the earth. And they don't have a lot of leases, but they have some very, very big leases. So I would not be very happy as a CFO if I got my lease liability wrong by millions and millions of dollars, which could easily happen with a lease worth hundreds of millions of dollars. So there's both the materiality aspect that I might only have 2 leases, because we have airlines, right? And airlines don't have that many planes. And then likewise, I might have 50 leases and they might be smaller things, so it might not be so material. But I think practically comparing to spreadsheets, really once you get into double digits of spreadsheets, it gets hard. And not for transition. So we transitioned in 2019. It was pretty easy in spreadsheets because you did a calculation, you go, yeah, I'm done as at the 1st of January 2019. So when they start to change, and Mary Lou's been doing it and she leaves, and then John takes over and he's not quite sure about the spreadsheet, so he changes it a bit, and then that control goes. So I would say, look at the materiality, look at the time being wasted on a bad process, rather than just the sheer number of leases. Because originally we kind of say, oh, you need 50, but actually even doing kind of 10 in spreadsheets is painful. And the other thing is that in this day and age of a more mobile workforce and people coming and going and changing jobs, your risk on someone's spreadsheet being used and they leave is just starting to get quite bad.
Yeah, and that's fair enough. Do you foresee a situation? So, for those of you who don't know, the UK and Ireland are going into what's called FRS 102, which is IFRS 16 disguised for small to medium businesses. Do you see that in our future in this part of the world?
Definitely. So we've been a bit of a laggard in the world, IFRS 16 for New Zealand. Australia for public entities or government entities adopted IFRS 16 in 2019. So Australia took it up. The UK for government entities was a few years later. New Zealand has still not done it. So IPSIS 13 is due to come in 2027. So the government will be forced to do IFRS 16 equivalent. I can't really see New Zealand or Australia staying outside the window of IFRS 16 for what would be called New Zealand or Australian GAAP for too long. So because all the bigger listed entities and government will be reporting that way, it's just a matter of time before we all go down that path. And what we're seeing in the UK is not a panic, but I guess it's one of those things that most people probably aren't aware of the requirement and how it could be quite time consuming, which is you just have to go back to see what happened in IFRS 16 to see the disruption it brought.
More than Brexit? No? Okay. Thank you for that. That was good. Well done. Thank you for that question. Whoever did, please send me an email and I'll send you a bottle of wine. Next question. Monica from Central Perk. How can I tighten the process between our property team and the information I need for compliance? Everything is always after the fact. Common question, this one. Hales?
Yep. So some of you may or may not be aware, we've just added a property information, property add-on into our LOIS platform, and we'll touch on that shortly. But the good thing from a compliance perspective is that LOIS keeps track of when you actually recorded it, and the general ledger functionality gives you that open close as an ERP would. So any backdated changes to your leases will flow through into the next open period. So even if you're only getting information from your property team 4 or 5 months down the line, that won't impact any of your previous month's transaction, previous month's reporting. It will go through in the next open period. So if we've got a lease and the change should have happened back in March, will effectively happen back in March, but we only, as an accountant, become aware of it in June. All the transactions or reversals of incorrect transactions from March to June will flow through into the June month-end journals and get posted as such. Now, from that information transfer between property and the accounting piece, this is where the new property platform is fantastic. And once again, I will take the controls and share my screen quickly. So this is a dashboard. There's a whole bunch of reporting on the property platform. But the key here is the ability to now do workflows within the property platform. And here, this shows us all the events that are outstanding and overdue. So if I just go back one step and I click on the overdue here, we've got 300, because this is a test environment, we've got 352 overdue events that haven't been actioned. And we come in here, and if we just take this first one, it's a CPI, which has not been actioned as yet. In there, you see there are 2 overdue events. This is a fixed price increase. We click in there, we go in there, we want to action our event. So the property person then comes in here. The date will change from that date, but this was only agreed then. So say today's date, the 11th of the 3rd, 2026. Okay, we go in there, press that. We then we review all of that information. It pulls in, it knows it's a 2.5% increase. We put in our reason here. And there would be something similar for CPI changes. You'd put in the CPI rate or percentage or new rental in there. Fixed price increase. You can add any documents, so any changes, any documents for that, you can add that in there. You can select a review, or you can review it yourself. And as soon as you do this, if I put in, for example, Ed in here, Ed would get an email requiring him as the property accountant to do that change. So this will then just flow through an email to the person, the accountant who needs to get that. They will get an email saying that this change has happened, and then that will give the accountant the ability to then, in the lease accounting side, make that change and then complete the loop here in property. So as you can see here, this gives us all of the information in property about this lease. Both the property accountant and the property manager can see that. And so everyone's aware of what's going on at a point in time. It makes it easier for the property person to do the things that they like to do from a property perspective. and it then allows the accountant to get the information at the first available time. So that property person doesn't have to remember to send an email to the accounts person to send that there has been a change, because it all does it in the system.
On that, and it's probably good just to go back a step as well, and Stefan, this is for you. What's the difference between finance person and a property person?
Oh, that's a loaded question, isn't it? So the big difference is finance is very much focused on a period-based approach to reporting. So as a finance person, you're governed by month ends and reporting after each and every month end and making sure that you can hit those timeframes. And at the end of the day, you'll get both reporting from those debits and credits. Obviously, to do that, you needed sources of information. And for years, we kind of assumed that our clients at LOIS were happily getting the information from wherever, from fleet, from property and the like. And they were, but it was often late to that person's question. And then the good thing about LOIS was, because of, like Hayley said, that it closed the period. It wasn't a massive effort, but it was still a pain. So what we've done by putting this all together is that the property people, they need to be living in the now and dealing with much more of an event-based environment. So we didn't see it there, but we've got calendars, and on Friday I've got a rent review that I need to talk to Larry, the landlord, around a price increase, because although these things are contracted, often like a market rent review is actually a negotiation. So if you forget to contact Larry, the landlord's probably going to give you a big increase and assume it's done. And that's the challenge of a property person, that although there's hard contractual deadlines, there's actually negotiations and work to be done around most of it. And that's why a property person will often be delayed, because although there was a contractual date for a rent increase 6 months ago, it could still be going on. And that is probably a point that a lot of accountants don't realize, that although I've got a hard contractual date, the actual act of that negotiation around that contractual date takes some time. And that's the good thing about LOIS. We've got the back modification and the catch up in the journals, which is cool. But obviously it was always a problem for the property people, that they'd be going, well, I have to remember to update the spreadsheet and send it there. Now that's all seamless with workflow to enable it.
Yeah, and I think that's really important, is that sometimes finance teams don't really fully understand what the property teams have to do, and that's something that we didn't understand probably initially either. And that's probably a challenge for everyone on the webinar who is part of a finance team. Go and ask the question of your property team, what do you do? Because there are ways that we can tighten up the whole process, which means you reduce, mitigate risks around slippage. And we had a client recently who said, oh, we just found another lease where it had a renewal 9 months ago that we missed. Now, if that was a prime site, you potentially could lose that whole site. And we know that there's sites like that your competitors are falling over themselves for you to miss those, so that they can take it. Ed, similar from a fleet side, do you think?
In what way?
So similar with regards to, we talked about it before, the delay in information transfer, etc., and trying to tighten that process up.
Yeah, no, absolutely. But a lot of fleet providers have a certain portal that you can log in and actually obtain reports. And actually, in regards to our fleet process, the best report to obtain is some type of version called IFRS 16. If you can obtain that version, then that pretty much gives you all the detail you would need for your IFRS 16 accounting in LOIS. And they also have options of adding in key finance fields like cost centers and IVRs and the like. They do need some sort of feed to get that in there, but that is usually a good starting point.
Yeah, and I think that's the other thing as well, from a question perspective within your own organisation, asking the fleet people, because we've seen it before and we've gone, okay, we've got Toyota fleet, so do you get this report? And they go, no. And we know that someone else does. Have you ever asked? No, we didn't know that it was there. So you can ask the question and actually get that information, which is sitting here, because you're sure as hell paying for it, aren't you? So as part of your fees.
And there's often for fleet, there's a big disconnect between someone managing fleet, someone paying for fleet, and someone accounting for fleet. So the good thing about what we've developed is it suddenly ties those all together. So we generally will go to the fleet provider to get the source because they should be correct. That will throw out the exceptions before you post them to the system. And then you can go and ask the fleet person, are you expecting 10 new cars and 5 price increases? And then you can push the button and the accounting's done. So fleet is one that's always been a pain for everyone, but I think it's slowly getting better.
Need to make sure you've got that range. Okay, Cody from Ramsey Street. Hales, how should we account for subleases?
Oh,
We're seeing this a bit more actually, because
Yeah.
just to put it in perspective, because there's more work from home, people and organisations have a lot more space that they're subleasing out because they don't need it anymore. So this is a question that comes up more and more. I reckon over the last 24 months, we've seen it quite regular.
for sure. And how long is a piece of string? So this LOIS does have lessor functionality, which includes subleases. And so we won't go into it in full detail in this session, but we have the ability of any lease to create a sublease on that. And it's a little bit of a setup process. So for this one, we'll go back to this person and do it in a little bit more detail. I think the key here is knowing that there is lessor accounting functionality within LOIS. And so if you're not aware of that and you have a need for it, to come and speak to us, and we can go through your scenarios, because I could spend the next 2 hours going through lessor accounting, and I think we might have everyone leave or fall asleep, one of the two. So we won't do that today. But please do, if you are struggling with this, please raise the question with us, and we can walk through this with you and go through it together.
And just for those of you that don't know, that lessor accounting really did not change under IFRS 16. It largely stayed the same with operating and finance leases. That's what makes it a bit tricky. The good news is with LOIS, it links to your head lease and goes down from there. So once you understand what to do, it's not too bad. But the standard is very confusing when they didn't change one side of it.
Cool. Thank you for that answer, and also thank you for not taking us through the long version. Okay, Ben from Accounts. This is a multifaceted one. Stephen, I'm going to give this one to you. CPI escalation, automation, bulk updates, modifications, and IAS 17 outputs.
Yeah, so we kind of talked through this a little bit earlier in one of the earlier questions when Hayley kind of showed the functionality around, it was actually a lease term reassessment, but actually within all that in life, there's lots of different ways of actioning items. I think with these, there's quite a few questions in here. Obviously, they're talking about manually updating CPIs, so it just goes in, they change it. There is CPI tables that can be used, but again, they're not that efficient because you've still got to action them. By far, the better way is the bulk updates, which actually come into the second item. So LOIS has a functionality called bulk invoice, and effectively it's a Excel template format where you can action lots of things at once. So that is relatively straightforward to learn. And again, you can reach out to the team to do it, and effectively you can process. I don't think there's a limit. Maybe there's a limit. Anyway, hundreds at one time. So a real common occurrence is I might have all my cell phone towers linked to a 2.5% CPI increase. It's literally about a 5-column template. You put that in and off you go. So LOIS is really great at that bulk upload from templates. And then at the next level for fleet and the like, obviously we've got the fleet tool, whereas it just reads what's in the file and does it all for you. So that's actually using the underlying same technology, but it is fully automated. So you've kind of got, you can do it individually and through the UX, you can do bulk uploads, updates and lives through Excel, or you can actually use our API tools and fleet. So that's, Answer's number 2. Number 3, is there a way to generate an IAS 17? So yes. So in the reporting, you've got 3 main areas. You've got reporting for accounting, audit, and I think it's called operational. And the accounting side of things, LOIS is automatically set up to be able to do IAS 17, which is the old standard. So when you first select a lease at the start, you have different lease categories, lease types, and effectively those lease types are linked to the kind of lease they were originally. So you'll see finance and operating leases. And so what that does is when you select the right lease type, that will be able to categorize it under the right accounting treatment in the old world under IAS 17. So for instance, in the old world, operating leases just went through the P&L. So if you ran the IAS 17 report, that would be a P&L cost, whereas if you run the IFRS 16 report, that would obviously be depreciation and interest and the like. So that's where you find it, that's where you do it. Bulk updates, you've got that in the download sections, and obviously you can talk to the team. Also, the other thing we haven't mentioned is our new AI bot for support as well.
AI.
You missed the trick there, DK. Okay, sorry. Okay, I want to talk about the bot. Yeah, cool.
AI. I mean, we could be here all day. Going to do another webinar on AI in a couple of weeks, so watch the space. Ed, you're still seeing, notwithstanding that it's 2026, the standard came in 2019, you're still seeing a lot of people using the IAS 17 report to back out and go old school, apart from the banks.
To be fair, I haven't had a lot of clients bringing it up in the last sort of year or so. Not sure, Hayley, what about you?
No, not really.
Yeah.
So most clients, I mean, some of them, they don't go to quite the IAS 17, so they may work on a cash basis, cash in, cash out, and then do the IFRS 16 transactions as a behind after EBITDA kind of level. So not for the management reporting, they might be doing it but from a smoothing perspective, they generally don't do that. So yeah, not really.
It's good to see most people have moved, apart from the banks.
Yeah.
But we're not going to change that. Thank you for that. Okay, Donald from Pennsylvania Ave. Stefan, here's your chance now, a bit of AI as well, ramped into these questions. So we'll talk this through. So we're really ramping up our documentation process and enhancing them, as well as ensuring we have sufficient controls in place. Very good to hear. So we'd love to hear the team's view on the best practice of controls to have. Second favourite question.
Yeah, cool. So that is a good thing to do, because as well as getting good process and controls, that will save you time and money. People love that. So what would be the best practice controls? So I think, first of all, have a system. Second of all, have defined process and procedures. And that also includes your accounting policies. So that's one that's often missed, that people don't have their accounting policies documented. So they'll do something in the system, and then the auditors will go, why do you did that? Because you don't have a for policy. So that's important. Then really, to be brutally honest, if the system is any good, it should give you all the controls you really need, because you've defined your process, and then the system enables all the controls. So looking at our system, you load a lease, it must be approved. The rates must be looked at. Then as it goes through the accounting ledger, modifications, approvals, general ledgers locked down, you've got audit reports on security, you've got audit reports on chart of accounts. All those things can be seen as a monthly basis or proactively whenever you want, or again from an audit point of view. So I would say don't overthink it. Just find a system that does what you need. Have your internal process, which we kind of say 5 days out from month end, process your changes, have someone review it, run the live reporting, see if it's what you expect. If it's what you expect, come month end, process your accounting ledger, run it to your ERP, check your reporting, job done. So it should be easy, but outsource it. Get a system.
Can Excel have controls like that?
No.
Cool. So I needed to know. Best practice for leases. There are a number of changes happening. One would go to be considered a new lease altogether, extension of a lease, change of a lease, payments,
Oh.
and lease incentive.
Right. So, well, there's a lot in that question. So best practice on. So, interesting enough, when they first started the standard, there was a lot of time spent on this around where a lease is an extension rather or a new lease or the like. And then as time's gone on, I'd have to say that the auditors have become less fixated on this. That as long as you've taken a reasonable view, that real technical, real detailed stuff has largely gone away. Obviously, it won't have if you're doing a gas plant or a huge mine site or something. But for most of the time, as long as it's sensible and aligned back to your policies, it's pretty clear. So the rules are actually highly complex because you get a new lease if the scope increases substantially, and then that's quite a grey area. Again, if you had your policies all lined up, it makes it easier. In most instances we see these days, because we have that functionality in the system, most people, if there's an existing lease and it's staying largely the same, will simply use that in-life functionality to change the payment schedule, put in new lease incentives or whatever. That's all in there. So really the big bit of judgment is whether it's a new lease, and that I'd have to say is largely common sense, but the actual rules are around the scope of the lease and the risk transfer, which obviously gets pretty great.
Yeah, and it's very rare we see an existing lease transferred to a new lease. So it's not often, it's the exception, not the rule.
Yeah.
And a lot of those just on the lease incentives, LOIS now has the ability to do a midterm incentive. We never did before. So for anyone that isn't aware of that, it was a release probably a year ago. And you should have received the release notes, but a midterm incentive is possible, whereas the other two are covered by the enough change that I mentioned before. So you can do it, changing these payments and extension of the lease all in one go, and then it would be a separate lease incentive. So it would be two in-life changes, but will probably only take you 10 minutes in the system if you had all the information available at most.
Thank you for that. Before we get to the last one, because I think we've got one more question after this, we'll come back to AI. So Ed, Jerry from next door has written half an essay. Thank you for taking the time, Jerry. We get property lease details a lot later when we signed up. A lease, obviously, signed up in April, get it in June. There's some stuff that happens after that. The problem is we can't alter the lease period by changing the start date. This goes in line with what we were talking about before. Do you want to give us a bit of detail around this? Because this is really, really common. We're coming into full year reporting in New Zealand. Australia's not too far around the corner. What should we be doing? What should we do around this?
Well, yeah, like you said, it's a very common issue, especially around the year-end time. You all of a sudden have an extra lease that you got to account for that wasn't there in the opening balance when you closed last year. We've got functionality set in place in the general ledger to ensure that journals are falling into correct posting period, we refer to it as. So in this example, all your journals would flow into the August period. But as you would have found out when you went to run that report for your, I'm guessing FY27, you would have had now an opening balance there showing that vehicle or that lease with an opening balance, which you didn't have when you closed last year. So the question, I think, really comes down to understanding how the LOIS reports work. If the lease is active at the time that you're running that report, and you're selecting an effective date that is after when that lease was added into LOIS, then that lease will be included in the report. But you do have the flexibility of choosing an effective date that's prior to when you actually added that lease into LOIS if you wanted to see that version of the report without the opening balance. And that's just a key sort of thing to understand about how LOIS does the reporting. And then that's how you can kind of marry that back to your SAP. Obviously, you're still having to move the effective date around a bit just to get the right result, but that's how you can still see that report from LOIS.
With regards to ERPs, obviously I think about 70% of our client base is SAP. I think we've got about 3 people on an API, and it's something that we're looking to develop at the moment. I'll get something thrown from me from the dev team over there, if it's all right. Do you need to use an API? Or what's the benefits, what's the cons of doing that?
I think it's funny, in the age of modern technology, everyone talks about APIs and how great they are and what they can do, and they
used to before until AI came up, and now they just talk about that.
And now I think APIs, it's got to be fit for purpose. There can be quite often a lot of setup and a lot of cost in setting up an API. LOIS has native APIs already, and it can talk to anything. But like you said, most clients haven't bothered with them, and that's not necessarily the cost of the setup from the LOIS side. It's very much the security and access around big ERPs can be costly, and then you're often using consultants to do it. So I think although APIs sound easy and they're there and they can be done, the cost benefit comes into it. So a lot of clients, because it's so easy to load from a CSV file, haven't bothered. Having said that, what we are seeing with the rise and change in technology so much easier is that the new APIs and access points are much, much better, and there's different ways of doing it that can make it more effective.
Cool. Good segue about the changes in technology. We'll go back to what we were talking about previously, AI. Are we seeing people use AI to determine key information like IBO, etc.? Well, the pitfalls, I think, very key. It's a very well worded question, this, that you think people need to be aware of. Are there any prompts that you could use to make sure you're getting the right outputs?
Right. So AI. AI can do anything at the moment, and it does some things really, really well. And interesting, like DK said, we're doing another webinar in a month or so. We'll talk a lot more about it, what we're doing and what we're seeing. But I think to address this question, short answer is, yep, AI can be used for lots of things, and it could be used for IBR. The problem with it is that if you blindly rely on AI without human review, you never really know if you have the right answer. Something with IBR is quite complex anyway, and the number that may appear reasonable, unless you break it down really carefully, you may always be unsure if you've got it right. However, this person did ask the right question, that what prompts could you be using? So if I said, please give me an IBR for my car lease, I will get the wrong answer. However, if I structured the prompt correctly, by giving the persona of the company, persona of the asset, pretty much those points I talked to earlier on, chances are it could get pretty close. But it's both having the skill to understand what the prompts are, which most people could, but also have that ability to overlay a kind of an expert eye to whether it makes sense. So I would say generally IBR with the right user could be done, but would be a bit risky because it'd be very hard to tell whether or not it's true or not. But there are probably lots of other AI areas that we're seeing come forward much more quickly within, well, all of finance, but also lease accounting as well.
Are we going to be at a point, in a not too distant future, where don't need LOIS, don't need a system, you can just use AI, smash out your numbers?
Yeah, well, so
SaaS apocalypse.
Yeah, the SaaS apocalypse.
Apocalypse.
SaaS apocalypse. Yeah.
Hard to say fast 3 times.
Yeah, that thing. Obviously, we've seen tech stocks wiped out a bit in the last few weeks, in particular. The big ones, the big enterprise ones, where they're saying, "Oh, look, AI will do all of that. It's just a matter of time." And we are seeing massive leaps in AI. So coding, analytics, a lot of this financial stuff that wasn't so good is much better now. But the thing is, especially with a compliance system, you are paying for efficiency for sure, which AI is awesome at, but you're also paying for control and auditability, and that is something that AI does not do well, because it may give you the answer and it may even give you the right answer, but it's quite hard to tell. There's whole industries at the moment being hit by AI because AI can do it faster, quicker, but that internal check and that review is still hard to do. The other thing is that to set up proper enterprise AI and have the controls and guardrails and all of that is actually pretty hard. It's something that the whole world is still grappling about. So you'd be hard pressed, and it's a question we always get from our clients, is what AI has been doing, how do you control it? So I'm not sure that too many enterprise clients would be too happy if Bob in accounts was getting AI to feed in the numbers every month and get out the answers. It probably wouldn't be a good thing. Not to say we shouldn't use it, but it's just right, putting it in place, having the guardrails around it, being able to verify the outputs, and you'll see we're doing quite a bit in the space, both how we code, but how we'll ingest data. It's really getting it to a point that enables the human to make the call and do it better.
Yeah, I think one of the key parts there is certainly from an enterprise perspective, and we talked about controls, etc. Is when you've got that data, AI is really good at analysing it. You know that it's correct, and we've actually come up quite a few times recently where we've been doing having conversations with tech teams from our existing client base, because there's a full change with tech teams wanting to get closer to solutions, notwithstanding they've been in place for 5-7 years, etc. But we've actually had CIOs, CTOs ask, do you have AI? Go, at the moment, no, but no, that's all you need to say. Because you just go down a whole different rabbit hole for that, because for a solution like LOIS, it's about controls and compliance. So analysing data using the AI, fantastic. Making superheroes and things like that with your favourite insects, awesome. But yeah, I think that the control aspects and all that are the key. Okay, lucky last question we have from one of our faithful supporters. I'll just read it out. How do you run the LOIS report for a full year 27 forecast, as some vehicles are due to expire? We normally replace them. Oh, we've pretty much had that one.
I think that's.
Can you show live how to do this? I think what we'll do with that one is we'll get in touch with you and we'll take you through a half-an-hour training run.
I think it might be a duplicate.
Yeah.
I think it might have been one of the ones we had previously.
But we can
we'll
do
have
that.
a double check.
It's easy. We can do that with our eyes closed. Anyone else got any questions? We're down to the last minute. As always, we've timed it quite well. So thank me for that. If you do have any other questions that have come up that you've thought of during this webinar, you haven't had time to either jot it down or ask it, please get in touch with us. You've got our details. As I said at the start, you'll get a recording of this in your inbox very shortly. Please reach out. Team here, very friendly, as you can see. Don't be afraid to ask these questions. Help isn't that far away. Like I said, unless you ask the question you don't know. You don't know what you don't know. And it's normally, and what we're seeing with some of these processes, is we can shrink that down because people really haven't changed over the last 7 years. So I've just done a blog about the 7-year itch. As people just, we've always done it this way. Doesn't have to be hard. Thanks again. We look forward to the AI webinar in a few weeks. Got some special guests.
Yep.
So we'll roll the email as well.
So you mean we're not special?
And on that note, talk later.
Cheers, everyone.
See ya.
Bye.
Thank you.